Imagine a small-cap industrial stock quietly positioning itself as a picks and shovels supplier for the next massive AI wave, humanoid robots. That's Vishay Precision Group, ticker VPG. With a market cap around $600 to $700 million and shares trading near $43 recently, this company has flown under the radar, but some investors see explosive potential tied to robots like Tesla's Optimus. Today, we'll break down the bull case, key risks, and what the valuation could look like in 5 years. This is not financial advice. Always do your own research, but let's dive in. Vishay Precision Group, or VPG, spun off from Vishay Intertechnology back in 2010. They specialize in ultra-precise measurement and sensing technologies. The business breaks into 3 segments: sensors, foil-based strain gauges and resistors, core for our thesis, weighing solutions, and measurement systems. Their flagship tech is proprietary bulk metal foil, sensors with extreme accuracy, thermal stability, and durability over millions of cycles without drifting. These are used in aerospace, defense, medical, and industrial applications. Revenue hovers around $290 to $300 million annually, with strong gross margins and a nearly debt-free balance sheet full of cash. It's a steady, cash flow positive legacy business, but the excitement is in emerging orders. Here's where it gets interesting. VPG is increasingly seen as a key supplier for humanoid robot hands, the hardest part to engineer for dexterity. Tesla's Optimus has doubled hand degrees of freedom from 11 to 22, needing tiny, ultra-stable sensors for precise control. VPG's foil tech fits perfectly, small enough for a human-sized palm, stable under stress, and qualified for high-reliability uses. The Substack analysis from January 2026 calls VPG a call option on humanoids, similar to how suppliers rode the iPhone boom harder than Apple itself. Key points: design wins. A leading humanoid developer, widely implied as Tesla, has been ordering since late 2023. Recent traction. Q3 2025 showed $3.6 million year-to-date in humanoid orders, plus 600K prototype orders from a second player, possibly 1X Technologies. Management commented, a major customer doubled sensing needs for next-gen prototypes, talks with more developers ongoing. Total cost of sensors per robot estimates $500 to $1,200 per robot in sensors, tens per hand. If production scales to thousands, Tesla's internal goal by late 2025 or early 2026, then tens to hundreds of thousands, revenue could multiply. VPG has a massive moat: 71+ patents, proprietary recipes, high switching costs after qualification. Legacy industrial revenue, $290 million, provides a floor, positive cash flow even if humanoids delay. If humanoids become the embodied AI revolution, potentially bigger than smartphones, VPG could become the standard supplier. Current valuation around 2 times sales. Bulls see re-rating to 5 times plus on confirmation.
No investment is risk-free. Here's the downside: geopolitical risk. Key foil production in Holon, Israel. Instability could disrupt supply. Timing and hype risk. Humanoid timelines slip. Elon Musk's history of overpromising. Mass production might be years away. Competition or technical risk. Robot makers could find alternatives or integrate vertically, though VPG's precision is hard to replicate cheaply and DoD ties complicate acquisitions. Market or execution risk. Broader semi/industrial slowdowns, e.g. recent Intel guidance dragged VPG down. Stock is volatile, big swings on news. If humanoids flop, legacy business supports the floor, but no moonshot. It's asymmetric, limited downside, 15 to 30% in worst near-term cases, versus huge upside if the thesis plays out.
So what could VPG be worth in 5 years, say 2030, 2031? Current setup, late Jan 2026, shares about $43, market cap about $600 to $700 million, 2 XPS on about $300 million in revenue.
Bull scenarios, inspired by napkin math from analysts, Substack, and Reddit discussions. Base case, humanoids ramp modestly, example thousands of robots per year initially. Humanoid revenue adds 50 to 100 million plus annually by 2030. Total revenue 400 to 500 million, 5x PS multiple, robotics re-rating, equals market cap $2 to $2.5 billion, share price 120 to 150, 3 to 4x from today. Optimistic case, 10,000 plus robots per year shipping, Tesla plus others, 500 plus sensors used per robot, humanoid revenue hundreds of millions, total revenue $1 billion plus, higher multiple, 10x PS on growth, equals market cap $5 to $10 billion plus, shares $300 to $600 plus, 10x plus upside. Some extreme Reddit bulls throw out wilder numbers, 30 to 100x, but those assume massive scale. Bear case, delays or no breakout, revenue flat or grows slowly to $350 to $400 million, stays 2 to 3x PS, equals market cap $800 million to $1.2 billion, shares $50 to $70, modest upside or flat. Analyst targets are more conservative, example $37 to $45 range recently, but they may not fully bake in the humanoid optionality yet. The key catalyst, confirmed large orders or production ramps in 2026-2027.